Over the last few videos on my channel, I've been reporting on what the Australian new crypto law actually means for everyday investors. I'm talking about the law that's requiring exchanges to hold an AFSL. And the number one question that kept coming up was, what do the exchanges actually know? What are they required to hand over to the ATO? And should we even trust them? So I reached out to Mena, the CEO of Coinstash, one of Australia's largest crypto exchanges, and I asked him to come into the studio and have an honest conversation on camera. I want to say this before we get into it. I was genuinely impressed by how transparent he was. He didn't come in here with a PR script. He came in here as someone who is just as frustrated with parts of the bill as what you and I are. And he wasn't afraid to say so. So he shared things I personally didn't even know. Things that every single Australian crypto holder needs to understand right now, particularly around what exchanges are legally required to report on and what this new travel rule actually means in practice. Make sure you don't miss that part of the episode. He didn't give me the watered down version that you've read about. He gave me the real version. He also shared a theory about where he thinks the government takes this, and that actually stopped me in my tracks. If you hold crypto in Australia, whether you're just getting started or you've been in this space for years, this is the most important conversation in this series so far. So let's get straight into it. Mena, thank you so much for flying down from Brisbane. It's very appreciated by me and the audience. There's obviously been a big regulation change in the Australian space. And really, people are a bit concerned, I would say. They don't know what the true intentions are of the government, the ATO. And so I thought, who better to come in than the CEO of Coinstash and share with us exactly the inside scoop of what's happening. So before we do that, I want to hand it over to you. Tell me a little bit about your entry into crypto and when you started Coinstash and why you started it.
Yeah, well, thank you for having me, for starters. And yeah, I can tell you a bit about my journey. So started in crypto space in 2013, did a lot of things from 2013 till around mid 2016. A friend of mine from school, from grade 9, so long-term friend, him and I started talking about crypto. He was also involved in the space as well. And then we decided late 2017, we wanted to start our own crypto business. We wanted to always be involved in this space, do something with blockchain technology or cryptocurrency. And then essentially we actually made a little bit of money through arbitrage.
Oh, yeah.
And then
is that why you got on the exchange side first? Because the arbitrage experience?
Not so much that experience, more so that we were looking at ways to trade and to make money in the crypto space. We did make a significant amount of money. Then we didn't want to keep it. We wanted to use it for something more. So we basically started working to build Coinstash.
Okay, awesome.
So from my side, I'm a product guy. Ting is legal and finance and accounting.
The dream team.
Yeah, so it works out quite well. And yeah, I guess I've built many products in the past, including a crypto wallet in the past for a different coin, e-magazines. I had 50 different magazines that I was publishing, all different health and fitness related things, and all different apps that were live. And I wanted to create something more unique as well. So that's why I started working with Ting on the Coinstash.
Well, thank you very much for the backstory. And look, I suppose over the past week or two, I've published some videos and they've really blown up. A lot of people are putting comments in there around this regulation changes. As we tend to know with Australia, when something comes out, only the good side of it is released. And then there's, potentially what they're up to on the back end. And from the public's point of view, it's only speculation. So
correct.
Talk to me. Obviously, the biggest part of this regulation change, it really is on the exchanges. It's requiring them to have an AFSL and reports, which it seems like an absolute funnel, a surveillance funnel that's being occurred or put in place. So talk to me a little bit about what it means for you. And are you guys the enemy or are you guys just the messenger?
Not the enemy. Let's just establish that first.
Put the guns down.
And not so much just a messenger.
Okay.
So I think it's a bit scary at the moment, but I do come from two different places at the same time. So if you look at my history, I started in the crypto space very early on. I'm a crypto bro, as you would say. I'm a crypto enthusiast as a more formal way of saying it.
For sure.
And I guess that side of where I am now, I'm seeing this change where the government wants to get involved. It really wants to regulate the way that cryptocurrency businesses and everything associated to that operate. But on the other side as well, what I actually see in this space is a lot of issues, a lot of scams, a lot of things that if it's not regulated correctly, it's going to create more problems.
Okay.
So the government's trying its best to find a way to kind of fit in to something that's very new and very emerging.
Yeah.
I mean, even on that as well, like they've released this in stages. So right now we have to abide by the 1st of July for a bunch of authorizations. I'll get this out slowly because it's quite a bit it took me a long time to get this as well.
Please.
The authorizations on an AFSL,
Yep.
there's 2 different categories of authorizations on each one, which is issuing and dealing. I believe, yes. Let's make sure I get it right.
Yep.
So, and then what is an authorization in this case? Well, it is basically, is it a financial product of sorts? So you've got things like managed investment schemes, debentures, securities, non-cash payment facility. There's all different things, authorizations that you can get on the AFSL. And then there's the issuing and the dealing components. Issuing means you actually are doing that particular type of project. Dealing means you're just allowing people to use it.
Okay, so exchanges on the dealing side?
Dealing side for us, it's not as complicated, but we're still being regulated.
Of course.
And we're being controlled in that sense, but it is for the better.
Okay.
Yes.
And so when we talk about it's for the better, I want to, because I know what the comments will say. There's the 2 worlds in crypto. There's the DeFi world, and then there's the centralized world. And as you explained, you actually came from, the DeFi world, the crypto bro world, the original world, whatever it is.
I was there when it was created.
Exactly right. And now you've obviously started an Australian exchange, and that's part of the centralized world, which by the way is a very important part for new people to come into, right?
Correct.
And so when you're speaking today, you're saying you're going to share with us what it means for that centralized world, and you're also going to share with us what it potentially means for the DeFi side world as well. Or I can maybe talk on that as well too.
Well, in my mind, I believe that everyone goes on a journey with crypto. You do start out as a crypto newbie, as you want to call it, someone who probably more stems towards, I would say, crypto gambling. Which in my mind is what's that next 100 times coin? You hear the stories around it all the time.
And that's exactly what Improve Wealth tries to stop. We try to get people coming with a structured side. But
well, not everyone gets that luxury. By the way, I didn't. You went around in 2013, right? So maybe you should have started that back then.
I was too busy trying to figure it out myself.
Well, there's that side of it. When you first start in the crypto space, that's what you're looking to do. Then you move into more other areas where it's long-term hold. You have opportunities to hold assets, and then you go back to kind of like a hybrid solution on that. So I think everyone goes on a journey pretty much in the crypto space. I think that you start out as a crypto newbie, you move in through the space as a crypto gambler of sorts, which is kind of like that, what you kind of learn in the beginning.
And on that's where we really try to stop people going that way now. So we really preach to people, you need to start off with the Bitcoin and Ethereum. You don't need to chase the 100x. And then of course you can start to allocate a portion of your portfolio to the risk side.
Exactly that.
Go on.
I fully agree entirely. But on that journey as well, you're also moving into that DeFi space eventually. You're going to learn about the DeFi. You're going to go into a place that's even more emerging and even more chaotic, I would say.
Definitely.
Wild, wild west of crypto. And the crypto is already considered a high-risk asset. High risk, high reward as well. So it kind of balances out in that respect. But so essentially when you consider that journey, everyone's going to be there. We're still the early adopters. We're still at that point now. It's still not 1 in 3 Australians, yes, but really significantly have invested in crypto? No. They've trialed crypto. They've tried their little gambling routine and they haven't succeeded. And a lot of people have that experience. That's okay. That's the point, but in terms of learning curves and things. But when you really want to consider what crypto is good for, it's long-term portfolio diversification.
Yeah, for sure.
So that's the journey. So anyway, coming back to what you're saying about what does this mean for both sides of the area? People who are more experienced in the crypto space, people who are new. Well, it just means that we're kind of allowing people to. It's actually a protection overall, I would say.
Okay.
More regulated means more adoption. More adoption from a financial licensing perspective as well means less friction. So even if you wanted to go into that DeFi zone, you still do that. you would have less friction getting your money on to platforms with the banks because the crypto platforms are now regulated.
Okay.
So that's one angle that helps them. At the same time, it also enables us to start releasing more products that exist inside the DeFi. So we're kind of restricted on that at the moment.
Yeah, that's a really interesting point, actually.
It's also very scary to do that. So everyone's had an experience where they've lost something in the DeFi. We do it with a regulated sense.
Okay.
So we take more protection to make sure, even now, Coinstash has the ability for you to trade DeFi coins right now. It's one of the only platforms that can do that. I'm not giving it a plug. Just
But like earning interest on it or things like that, you're saying the regulation, you need the regulation to be able to offer that, right?
There is products that exist in the DeFi that we can't really work with right now. I would even consider it as the simplest of staking. I would still consider that a DeFi product.
Yeah, sure. We'll jump more into things like the travel rule and things like that. I want to ask you and see, from the inside word what it means. But I do want to recap that because I think it's a really important thing. So basically what you're saying is, the two worlds, they exist in parallel.
Yes.
The regulation changes that are coming are in your eyes, beneficial to the centralized side of things, right?
Well, they're required for
yes,
starters.
Required.
But if you look at it from an angle of it has better controls around it, which means that you're more protected.
Yep.
And I know that's weird. I know a lot of people are going to have complaints about that too, because I would too. But
there's ups and downs of everything, right?
We don't necessarily have a choice in the matter.
Yep.
But it's not in a bad way. In my opinion, being in the space for this long, having to deal with the amount of scams and fraudulent things that have happened, it's those people that are causing the issue. But this was going to happen no matter what happened.
Okay, cool. And then, because I know, what the comments were when I, made the first video about this, the other side people were saying is the surveillance side. So they're kind of going, well, every single transaction that I'm doing now under this travel rule is reporting as a direct funnel to the ATO. They're also going to be, because of the AFSL process, the cost to obtain it, going to reduce the amount of competition that's out there on the market. Only certain exchanges are going to be able to survive this. So that's like the downside. I think we'll tap into that more in a moment because what I want to ask you now is talk to me about how long you've known this to be coming about, having to obtain an AFSL, and talk to me about the costs associated with it, what it means for your infrastructure and your business.
Probably in the hundreds of thousands of dollars it'll cost us from a compliance perspective. We're having to look to hire AFSL compliance on that part of the process. And we've known about it since around November, December for like proper, this is what's going to happen.
Yep.
Yeah, so it's quite soon, I would say. They've only told us, they've given us
a lot to pivot in a short amount of time.
6 months, pretty much, to say like we're not. So ASIC has come forward and said we're not going to. I mean, if you want to put it in layman's terms, we're not going to sue you.
Sure.
For the next 6 months, and we're going to expect you to be at this level.
Yep.
After 6 months.
Okay.
Which is fair as well in the sense of. They're giving us clarity. They didn't really have full clarity of what everything was in the past. I also feel that's a bit of a detriment to other businesses in the past who had to deal with situations where they were like sued by ASIC, which is
they didn't have even the framework to know what to do, right?
Well, that's, it's come out and it's come backwards to say like they didn't do anything wrong, which is great to see. But at the same time, that uncertainty that like of what's going on in this space, how to address these products, how to issue them to not issue them or issuing them in some senses. People, if they created something that was unique as well, it's becoming more, now you need AFSL to start something that has these as financial products. It's interesting. The DeFi space is even more advanced. Like there's more things that are coming out that are all brand new ideas, but also keeping on that front, on that same direction. If you don't have framework in place for something that you're investing in, how can you be sure that it's not going to create a negative impact for you?
And I think that's the big one that we can talk about here is, okay, yes, the crypto bro world, we're talking about the surveillance funnel, we're talking about we don't like this impeachment, but you do still have the opportunity to go on the DeFi side. But if we focus on the centralized side and who the real market for that is, which is institutions and big money coming into this market, well, they can't operate in it without clear guidelines, right?
Yeah.
So they work in tandem. You need to advance the guidelines and everything, and if that does mean regulation, then that's what has to happen, right?
Absolutely. I think if you look at it from the lens of you're still an early adopter. You haven't, you're still in that early space right now. And then when these things come out, it controls it better to allow bigger institutional investment. Why aren't you considering it? You know, why aren't you considering investing right now?
Yeah.
But anyway, we don't have to talk about investing. I'm just someone who's passionate for that and portfolio diversification.
Well, yeah, it's a big part of like what I advocate for, and how can we get this message to the more traditional markets. And it's honestly just coming to the point that it's like you're pretty naive if you're not allocating some of your portfolio. It doesn't have to be 80-90%, but it could be 5 or 10% to the fastest growing
Not financial advice though.
Not financial advice, but to the fastest growing industry and asset,
correct,
which is digital and crypto.
It's fully emerging. I mean, if you look at the fundamentals of it, you look at Bitcoin, let's just use that as an example. And I mean, I won't go into it too much, but they call it digital gold, right? It has scarcity, same as gold. The only thing that I would say that it differentiates to itself, like as a store of wealth, it's very liquid in its own ability. So when you have crypto, you can buy and sell it very quickly. There aren't many assets like that when it comes to investing outside of just holding cash in the bank or holding cash as cash is king.
Yeah, exactly.
I mean, if you hold cash, it doesn't earn you anything from an investing perspective. In the bank, it's probably the lowest level you could possibly do. You're just considered saving at that point.
Yeah.
It's not a bad thing, but it's the lowest form
of getting burnt to inflation.
I mean, we could talk about inflation.
Yeah. Look, what I do want to get into, I just want to step into the realm of just taking it back one step, and from the insider point of view, really highlight to me what the direction is from the government. So talk to me about the travel rule.
Yep.
What is that requiring the exchange to do? It might not be the best news for people to hear, but it's best that they know. So
of course.
Yeah, talk to me about what is actually required, what they're requiring you to report to them.
Yeah, for sure. So the travel rule's been around for quite some time internationally.
Yep.
So we're seeing it come into Australia now. It's a little, the term of what we become a VASP. I can't remember what the acronym actually stands for. Verified something. Anyway, basically what each of the exchanges the exchange becomes a VASP. And when you want to send your crypto somewhere, you have to be sending it to your own wallet that you are in control of.
Okay.
Now, I also say in control of, not ownership, although I think that the direction was to make it that you have ownership of.
Okay, got you.
But that's impossible in blockchain.
Yeah, it's an anonymous wallet.
Yeah, I mean, and that's something where it's interesting of how you can verify to say that you have control over the wallet. There's 3 ways to do it. I can get to those in a second. But essentially what you're doing is you're sending funds to say this is going to me.
Okay.
Now, outside of that, you can send it for payment purposes and for gifting, which fall into the same category in crypto. And obviously, in that sense, it's a taxable event.
Sure.
And that's what it's all about. In that sense, making sure that you're not trying to... I would say that the number one reason is not trying to hide something from the government.
Okay.
Is what they're trying to avoid. But it's actually not as big of an issue for, you would think, for the average Australian. It's because there's a lot of money moving around from scams and frauds from that sense. It actually protects from that side better.
I've got a question which I think a lot of people listening to this will have, right? So I think a lot of people understand, who know what the travel rule is, think it's just any transaction over $1,000 needs to be reported to the ATO.
It's any transaction.
Any transaction. And you're also
Well, we don't report it. We have to basically implement software.
Okay.
That ensures that when you send it, it's actually not reported to the ATO like that. No. It's not, to my understanding. To my understanding, it's when you send it, it's anything is reported as a suspicious matter report, SMR, whenever something is wrong in any sense. But those aren't disclosed, and that's just happening behind the scenes in every business that you're working with that deals in financial space.
Gotcha. And then, but the other side that you're saying, which is a little bit more unique to crypto, that there needs to be proof of ownership.
Correct.
Okay.
Not
and so what does that...
Proof of control.
Proof of control.
I believe it's meant to be ownership, but it doesn't actually work, in my opinion.
Okay.
So I'm not really sure what the plan will be from here moving forward. But so essentially, when it comes to self-custody, it gets a little bit more complicated. How do you have control over the wallet that you're sending to? Then when you have control, they consider that to have ownership too.
Right.
That's what it comes down to. So there's 3 different tests that you can do.
Yep.
The first one is the Satoshi test. So essentially what happens is as an exchange, we would give you a wallet and then you would send a small amount of crypto in. We would then refund that amount of crypto and then we prove that you have control over that wallet.
Sure.
The second way is signing.
Yep.
So it's a pretty traditional way of doing something, but more so for us, not for the new people into the space. You basically connect your wallet to the exchange and you verify that with a signature, that it's yours.
Yes.
The third is, to me, is probably the most practical, and I think it makes sense from a user experience perspective, declaration. Declaration can confirm that you have ownership at the same time too, 100%. Because you're declaring that this is rightfully yours in control and that you own this wallet address that you are sending to.
Yeah, definitely. And it comes to that catch-22 of like freedom versus having the right guards in place that people aren't getting scammed or people aren't sending it to the wrong place. So some people may get up in the air.
It's a big deal on that front. Yeah. It completely stops the idea of you sending to the wrong place unless you declare it to be that way.
And then you take responsibility.
Correct.
That's what I want to happen.
So, I mean, unfortunately, there is people who would still do that declaration to send when they're being coached to do so for the wrong reasons on them. But we do have awareness campaigns to try to encourage people to understand what actually is happening. Once you send the crypto, it's gone. So
okay, Joe. Well, thank you very much for sharing that, because there's not many people who can answer those questions so directly who are actually dealing this with every single day. You read one thing online of what it means, but it can be hard to understand the difference. Just to summarize that travel rule, so where are we up to now? That's like the end goal. That's what is coming, is going to happen. What are we doing now, and when will those kind of changes come?
It was originally meant to be implemented by us on the 31st of March, but that's been pushed to the 1st of July now. It kind of like aligns with everything else that's going on. So it's all in the same order. Okay.
And if I'm a exchange customer and I'm trying to withdraw to my MetaMask wallet, in kind of one paragraph or sentence, what's the difference going to be? Right now, I just say I want to send it to there, but after this comes in place, I have to declare, or I have
nothing would change on your for a self custody wallet.
Yeah, self custody.
Yeah, so you would have a declaration.
Yep.
That would say that I have ownership and control over this wallet.
It might be as simple as just ticking a box when I withdraw, saying I declare that I own this wallet.
And when it comes to sending to a different exchange, it's a little bit different process, because we're all registered as VASPs. All the exchanges, we all have access to be able to then verify that the KYC that when you send it to a wallet address, if you say that's your wallet address, we can actually see who actually has the KYC behind that wallet address from the other exchange.
Okay. So now where I want to go is I want to, like obviously in an ideal world, running a business, you prefer not to have all of these things that you have to do as a business, right? So it must be frustrating, it must be expensive to do all of these things. Just talk to me, the audience, about where you position yourself, because I see Coinstash as the exchange for the people. I've always seen Coinstash do what is best and have that crypto element. You can buy altcoins and things like that, but just dialing into this, talking about maybe some of the frustrations and just
I've been there.
Yeah,
I've been there with the banks. I know what it's like.
Yeah.
I mean, I still have a check at home from NAB for 2 cents when they shut one of my accounts down many years ago. And I hope that NAB is not going to, I still have a NAB account.
Yes, they're closing all down now.
yeah. But at the end of the day, they closed one of my accounts. They weren't happy with the fact that I was involved in crypto. So I've experienced that friction on it all. So I know I'm here. I am someone who is a crypto bro.
Yep.
But I'm also trying to understand how to bridge that gap that we have. Traditional finance, world of crypto, all of that is very important to me. So
like when these things come in, obviously, travel rule, it's more expensive for Coinstash, all these things, but at the end of the day, you're trying to be as regulated in line with the regulation as possible, while still ensuring that it's a good user experience for people. Okay, cool.
That's exactly it. About the user experience is important to me. I'm trying to make sure that your experience, nothing changes. I don't want it to be any friction. I don't want to make you jump through loopholes. I want you to be able to trade crypto is what you're intending to do. And if you want to take it off and take it into your own hands as well, that's perfectly fine. If you want to secure it in your own way, that's perfectly fine too. I do recommend when you do have self-custody that you have proper education around it.
Yes, I want to tap on that as well.
Oh, yeah.
We'll jump into that.
Okay.
there's some things that you understand, a bit of inside scoop. If we're going to put the conspiracy hat on a little bit here and maybe take off the Coinstash logo or just get involved with what other people are thinking, we are frustrated with the banks and the government because they haven't supported this industry for so long.
Yep.
And it feels like they're just coming in with AFSL, which they're going to make $50 million for the licensing. And the banks are now we want to get involved with what's going on and take a slice of the pie.
I don't think the government's good at making money. By the way, I think they're good at spending money. So I don't think 50 million is on their mind, to be honest.
No, but
they do a lot of stuff. So, I mean, that's why they have to spend it.
Exactly right.
So.
But talk to me about some maybe these acquisition theories that you were talking to me.
Yeah, look, good point. I mean, we were talking about it before. I have this inclination that once we move into this space, crypto exchanges are becoming more regulated in a sense. Might be adoptions, might be acquisitions from banks to have these as part of their offerings. If you look at what the reasons why there's frictions with the banks and crypto exchanges right now, it's not what they say it is. It's not about the fact that they can't deal with the scam rates are so much higher because there's higher scam rates in other financial areas, much higher.
Sure.
It's nothing to do with that. It's more to do with the fact they lose control over the money.
Spot on.
So that's their issue. Okay. Now, when you look at how a bank fundamentally works, it's not the bad thing that it may seem like they're negative for thinking that way, but a bank is meant to secure your funds. It's meant to give you a rate of return on your I'm stuck on crypto. On your assets, on everything in that sense, borrowing and spending is the two things that a bank facilitates.
Sure.
So when they lose control over that, and it goes into a space that has a lot of new things going on,
offers and a
lot of things that they don't understand, they don't know how to deal with it. It's very much a blanket cover. We just need to stop this for now until we understand what's doing.
Right.
Well, that's what the government's doing as well. So this 1st of July movement is AFSLs for financial products to be able to list the tokens. But the end of next year, there's two brand new authorizations coming out, DAP and TCP.
Okay.
They're brand new into this space that they've never been seen before. And they're to service crypto businesses in general, or anything that you want to do. TCP is for being able to tokenize a real world asset, like a property. That license, that authorization comes out, and you can start to do that at the end of next year. So the banks, they don't know how to basically
get a slice
return. Well, yeah, they do need to make money in order to I mean, that's how they secure your funds at the end of the day. They have revenue. I would say it's more shareholder focused, but that's just how it is at the moment.
Sure.
But I guess what you're seeing is if we become a more regulated product, the banks will have no choice but to align with us.
Okay.
So I feel like the only natural way to do it from there onwards is for them to acquire a cryptocurrency exchange in order to then take that financial front. They've got that. They haven't got any excuses for that anymore. They still have their ability to offer new products.
Okay.
It's essentially what Coinstash wants to do. We want to bridge that gap between traditional and the world of crypto. And that bridging of a gap is essentially that. Now, I'm not saying that acquisition from a bank is anything that I've thought of.
Sure.
But at the same time, I feel like that's the movement that someone might take.
That's what your mind goes that, this could be a thing that happens, right? And you think that's positive? Is it positive or negative? I feel like you're saying it's potentially a bit positive.
Depends on the bank.
Yeah.
So most of them probably, I'm just kidding. No, I think it's positive and negative at the same time. Yeah. I think that you don't want something that is controlled by a bank in a sense.
Yeah.
That's you move out of home for a reason.
Yeah.
Because you want your own rules.
Yeah, sure.
When you grow up. So you don't want to have especially in this space that we operate where the rules are being written as you go through. So you don't want that control, but at the same time, you do want that backing, that trust is there. Banks, they will do the right thing by you. The bank is guaranteed for your accounts for $250,000 is guaranteed. Those kind of features.
It's really, again, about putting those two hats on. And if you're talking about, the crypto DeFi world, then the banks never had our back, and why would we want them to acquire and all this? But if you're talking about that centralized world, like an alignment between the two, where that,
if it's done right,
could have a lot of positives for, the institutional industry, for centralized and what's going on that side. So okay, that makes sense, and thanks for sharing.
But even if you look at how the banks operate now in Australia versus other countries as well, we do kind of need to have that change of angle. I would say that the viewpoint for how banks deal with customers here versus other countries. The example for you, when I was in India, I was setting up a bank account for a company. This is many years ago. But the bank managers actually come to your office to be interviewed.
Right.
So it's not that you would go to open up an account. They come over and they said to you, please open up an account with us. And they're lining up to give you an account.
Plead their case of why they're better.
Yeah, and they offer you different things and everything. It's like you have a smorgasbord of chocolate favorites as they all come in, each one of them.
That is what kind of worries me about this regulation, and going back to the cost of AFSL, is that competition side. And, when you start making it very hard, like if you take yourself back to, what was the year that you started Coinstash, sorry?
2017.
So 2017, if you were just starting this business and you had to go and acquire a $200,000 AFSL, like, it's a lot more to consider, right? And
it is.
What a great exchange you guys have built today, but that has, because you've been able to kind of operate in more of a free market, and haven't had these massive upfronts. So I feel like what you're saying there in India, that they'll come to you, well, that's because there's better competition, whereas this rules could really reduce the competition.
I get that too. And I mean, there's also the custody authorization, which is one of them that you might need to get, which means that there's, if you're an incidental custody provider, so it means you want to charge on holding custody for your customers, then you need to have $10 million guarantee.
Okay, yeah.
Like $10 million that you were willing to, it's a lot of money for someone to try and do. Non-incidental is $150,000. So that's more understanding. But all of these are like barriers to entry.
Yeah.
I don't know if that's fully the government's side of it. No, I know that there's been talks over time where the government has spoken to us. We have moments where we talk with ASIC and we suggest things. I think that was more suggested from a different exchange.
Okay.
So that might have been done as a way for them to protect new people coming into the space.
Okay.
Wasn't done by Coinstash.
Okay. Anything to share?
I could show you a lot of things, but
sure.
But there's lots of things that happened in the time that you're in this space, and you start to learn who's trying to do what at the same time. But yeah, it's not Coinstash who would have suggested that entry barrier.
Okay. Now, what I want to get into is, like, another part of the comments was, I'll just use international exchanges now, or I'll just do OTC transactions. I know the answer, but I want you to share, some of the myths about what people are thinking.
Yes.
Yeah, I'll hand it
Well, I mean, at the end of the day, that doesn't change anything.
Okay.
No, you've still got the same responsibilities and like the same rules that apply to you no matter what type of transaction you're doing. Yeah, nothing's changing. OTC, yeah, all the same.
And so things like the travel rule and it being reported or recorded, whatever it might be, just because you're using an offshore exchange, like I think it's called the CARF, is that right? CARF. And that's basically that the 100 countries, including now Australia, have to report or have to record those transactions. And so basically, these offshore exchanges still have to report, right, on what you're doing.
Well, I think in terms of, there is a lot of just like transparency that's looking to be there. It kind of gets interesting if you look at it from a blockchain perspective. Everything's there.
Yeah.
But when you move into the centralized world, it's not. Because it's all recorded. So it's kind of the same thing. There are privacy coins as well, which hide your transactions on the chain. But Bitcoin was never intended for that.
Yeah.
It was meant to be a way for you to always be able to transfer. That's not being limited. You could still transfer from one wallet to the next if you had it yourself. But when it comes to the exchange side of it, they don't have a way of tracking to see that where it's going or what it's doing. That's when it gets interesting, because the biggest triggers for that was when big scams take into play. Like when that happens, so a lot of money is stolen. in the space.
Mhm.
It's those are the points, those are the news articles that trigger these issues, that these things are coming out. It's exchanges that get hacked overseas and stuff like that.
Okay.
And just speaking of that overseas, like I think that one of the things that people are also thinking in their minds is, what if I was to use an exchange that was overseas? Well, I mean, sure, but if you own property overseas, does it get more complicated as well? Like something happens, you'd have to be there for it. I mean, just something that's on topic for me at the moment, if you wanted to buy a property in Bali, it's quite complicated to get that done. And then in some cases you can lose access to it on the basis of family inheritance.
So the big word you come into is both protection,
Well, yeah, like if you really want to deal and have more trust and security, deal with Australian exchanges. Don't send it overseas, because at that point you're working in that jurisdiction, and you might find a better option to do that, but that comes at a lesser security point. So, I mean, what's going to happen?
Yeah, I mean, like personally, like the reason people want to go overseas is because they want to avoid this surveillance funnel, right?
This has already happened as well. Mind you, FTX.
Yeah, correct.
It's already happened. A big major exchange overseas has crashed. That's the most probable, like the most obvious example of what's happened. But
sure.
But it's not just that one. There's many other ones, smaller ones, that have had similar issues. And the minute that you think that you're dealing with something that's worth your time and your money, then they both disappear.
Yeah. No, 100%. I mean, I think it's just like knowing what people are thinking there. It's like there's laws in the world, right?
Correct.
Driving laws or whatever it is, and they go, well, I'm abiding by those. I don't need someone to follow, like a police officer following me around, watching every single move I do until I make a mistake.
Feels like that at the moment, though.
Well, yeah. But that's kind of where people are coming from with these changes that are happening. They're like, well, I'm paying my taxes, I'm doing my things. I don't need to be followed around and told, oh, you did that transaction or whatever it is. Those get privacy and have the option to report it, or like on their responsibility to report it. So
I fully get that too. I think that our responsibility doesn't, like, you won't see the changes so much.
Sure.
Unless you're trying to do something that doesn't kind of conform with the process.
Sure.
So nothing would really, from a user experience perspective, nothing's really changing too much.
Yeah.
You might have a declaration that you're ticking to say that you have ownership of something, but that's...
And again, to I think, like, the moral of this story we're getting through is, that you're the messenger, or it's a very important role. I'll say it's a very important role that centralized exchanges play.
Yeah.
Not everyone can enter in from the DeFi space. Okay. If I'm talking to my old man and, getting him, and when I did get him set up in crypto, it wasn't easy for him to understand downloading some software on a computer, and that's his wallet now. He is much used to stockbroking and, being able to speak to someone and they do the transaction, this stuff. Exactly. So there is a huge part of the world that needs this, and there is regulations coming in place. And as you said, you guys are obviously doing your best to...
We're the messenger.
Yeah. Feel that and be compliant, as well as still provide the crypto people what they want.
To be honest, my biggest success would be to ensure that everything is seamlessly happening for you, without having any friction coming from this.
Yes.
I think that it's important that we have these guideline systems, these financial licenses that come into play, because they allow us to grow in the industry, allow us to connect things together better. But I don't want the experience to be more difficult for you. I want it to be the same as what it was, because at the end of the day, it can get 50 times more complicated if I opened it up to the DeFi world. But we actually like to bring that world in, without you having to feel like it's complicated.
Sure. Yeah.
So that's the way to do it, I believe.
No, look, I love the transparency throughout as well. This is like the main thing. There is the two sides, and you guys are doing your best to make it easy for people to do that. And if they want to go on the DeFi side and do it, they're open to that.
Yes.
There needs to be a safe place to do it on the centralized side.
I think the most important thing to realize in any sense is portfolio diversification and risk management. So if you are moving your funds to go and to enjoy, to do different things in the DeFi world, just be aware that you shouldn't use all of your funds for those reasons.
Yeah, of course.
People start that journey in the crypto space in a particular way. They end it in a particular way. Yeah. I think if you're being the best to your true self, so that's your long-term self, then you're looking to balance it well. So but have some fun. I mean, I still join the DeFi space
Yeah.
here and there. I emerging coins and tokens that are coming out.
I like what you say there because, and we'll talk about custody now, right? I want to open it with the classic phrase of if it's not your keys, it's not your coins. First of all, what's your opinion of that?
Perfectly fine. I just think it's interesting when you start to consider there's an inverse relationship between security and convenience.
Yes. Yeah. And responsibility, I guess, as well.
Yeah.
That's it. So that's fine. So like, I mean, obviously, as you say, being crypto, bro, you agree for that for long-term holding. And as long as you understand the responsibility and you're educated in the right way to make sure you secure those funds, because it's only
that's right.
The responsibility is so high that you do one mistake on there.
That's the common thing that you see. So like even on Coinstash, there was a high net worth individual that I was assisting. And if I hadn't kept, I asked that person, I said to them, do you want me to keep a copy? Because it's a friend of mine. Do you want me to keep a copy just in case in a backup of location that I will not disclose?
Sure.
Yes, I do. Okay, cool. The time comes. They actually didn't keep their copy.
Yeah.
They made a mistake.
Yeah.
So, thank God I actually did that part because I'm like embedded in my mind. Security is like everything is crazy on that front for me.
Sure. And same on my front as well.
You learn that after years and years of learning about different things that are happening in the space. So when you take it into your own hands, you need to make sure that you have proper education in place for knowing how to keep it in your hands.
Yes. Yeah, exactly right. And I mean, it gets to that phase as well, like talking about self-custody. Something you said before was, if you are going to engage in DeFi, don't put all of it in. No. Well, when it comes to self-custody of, say, Ethereum, as an example, in my opinion, the best way to keep it self-stored is through a Trezor wallet, cold storage.
Yeah.
But a lot of people don't understand that if you are using the staking function on that Trezor wallet, it's no longer in the Trezor wallet. It's not held as cold storage anymore. Okay, that's going through. I think it's it's slipped my mind the company that does it they use, but it's basically doing the staking through them.
Oh, if you do that, yes.
If you click that staking
that's
button.
One of the features. Like you're entering the most simplest form of the DeFi world.
Yeah.
But what's interesting about that is one thing that I puts less risk on staking, just something that's generally like good to share with people, because anything you touch in the DeFi space has risks. But when it comes to native staking, which is Ethereum staking, if there was to be an incident that happened, it would be so severe that the whole network would need to be rolled back.
Yeah.
And that could happen in the sense of, and it's catastrophic to happen even for that reason. Like if it did happen, it is possible the network can decide to roll back.
Yeah, sure. So you have that kind of like guardrail.
But if it's that severe, but it's never, hopefully it never happens because it would be catastrophic for different things. But my whole point of what that is, because there's so many people involved in that staking operation, it's actually not as high risk from a standpoint of just holding the tokens. Yeah,
got you. Yeah, and like some of the Ethereum I hold is just on Trezor, and then some of it I do actually stake as well. Like I spread some of it's on MetaMask and Lido, how people pronounce it, like liquid staking. So there's multiple ways that I'm doing it to spread my risk out, along the chain, and some of them give higher returns, some of them give lower, but
that's just risk management and treasury management.
But you also don't want to get to the point where you're like spread so thin that it's like I can't manage this anymore. So and it's all about that education curve. It's like, well, where are you up to in your education? If you're very basic, maybe it is keeping it on an exchange. That's probably safest for you. Or if you're starting to build your knowledge and comfort, you can start to withdraw some and hold that as cold storage and make sure you know what you're doing, do a transaction, delete your wallet, and make sure you actually can restore it with, we'll restore it first somehow.
I mean, there was a news article about that recently where a man lost access to his seed phrase. It's very interesting. Actually.
Yeah, it
was an interesting one to see because that was an SMSF related seed word one.
Yeah.
That's a big one to lose.
Yeah, and that's that responsibility side, right? Like
that's your long term. That's your
life savings.
Yeah, that's your future that you've lost. So proper education is extremely important.
And very important. Well, I suppose that's a good summary of everything. I really appreciate you coming down from Brisbane because a lot of people on the internet just jump to conclusions, I find. And who better to speak about it than someone that's affected the most, which is someone from an exchange and a CEO of an exchange. So really appreciate that. If you want to kind of finish on one note, or what would be the main thing that you want to tell people?
Yeah, I mean, one thing as well, if there's any questions people have, I'm always willing to answer them.
Yeah.
I always have time for people looking to learn
Mhm.
on things, because education to me is extremely important
Yeah.
too.
Yeah.
So I'll always have time to answer anything like that. One thing I probably would leave with is just the mentality behind what you're doing in the crypto space.
Mhm.
One thing I always talk about is portfolio diversification.
Yep.
I believe that a lot of people start out in this like gambling style in crypto. It's not that they do it on purpose. It's because we learn about everyone doing massive success stories in crypto, 100 times coins. It is possible. It is possible in every single type of investment that you do. But the most important thing is long term and portfolio diversification. So, not financial advice, but I always try to tell people that try and balance out what you're doing. Try to build on something that has store of wealth, that has long term for you. Still have fun, still play. I mean, 10% for me is my high risk.
Yeah.
Still 10% of what I do in my portfolio, I kind of muck around with, and I'm like, oh, that's a cool coin. I research it, I learn about it, I take proper understandings, I do all my points. And then I would gamble on that 10%.
Basically. Yeah, like it's like not the worst way to put it, like that gamble word, because yes, what gamble means is I'm taking high risk for potentially high return.
That's exactly right.
And like I understand the probabilities are low that it's going to win, but if I do win on that, it's going to be a big win. So for me, 10%, 20%, if the market's really hot and a lot's happening in the crypto world, and the more you kind of expose yourself to over time, like you can't just be an expert at this in a week or a month or 3 months. We've been in it for over 10 years now. So over time that you've been in it, you can get your timing a lot better. So timing the market's a lot better than timing it. Yeah, I mean, it's a good message to finish on. I think, as you say, for more traditional people, get some exposure, not financial advice, but have a look at this industry, where it's going, how it's growing, and consider getting some exposure. And for everyone else, if you are going into that self-custody side, be careful with what you're doing and make sure you're educated and understand the responsibilities. And then there's a safe place on the centralized side. I always recommend my clients to use Coinstash. I see it as an exchange for people. And I like what you guys are doing, so thank you very much.
No, I appreciate it. Well, I really appreciate being here with you, and I very much enjoyed this.
Thanks, Mena.
Thank you.
Take care.